Welcome to our webcast covering why choose a mortgage broker. First, I want to thank you for taking your valuable time out of your day to be with us. We hope that by the end of our webcast, you have some interesting takeaways, and we encourage you to contact us at your convenience for more in-depth information. And for those of you returning to our webcast series, welcome back. My name is Edward Marinescu, and before we begin the webcast, I want to introduce you to our experienced and professional management team of licensed mortgage brokers that focus on both residential and commercial mortgages on the A side, B side, and via private lending. From simple mortgage needs to complex purchasing and refinancing situations, we've helped clients achieve their property visions with our solutions and lender network. Firstly, we have Mr. Radu Arvătescu, the owner and principal broker of Mortgage Capital Investment, combined with Hisham Farid, Mitzkanteria, and myself, Eddie Marinescu, and you can learn more about each of us from our bios on the MCI website. MCI stands for Mortgage Capital Investment, and we're classified as a medium-sized mortgage brokerage which has around 35 registered mortgage agents, and we invite you to read our positive reviews on Google. MCI is also the official trade name of an established brokerage of 15 years called Centum Total Mortgage Services, Inc., located at 455 Kerr Street in Oakville, Ontario. And now that you know a bit about us, we welcome you to connect with us and stay in touch. So let's tackle today's agenda. We'll start off with why choose a mortgage broker, then move into one-stop shop, then discuss mortgage broker compensation, then take up the application process, then discuss the credit score, rating, and history and the importance of credit bureau pulls, then discuss broker negotiations, then fine prints, then eligibility differences, then how brokers are intermediaries, and eventually, reasons for you to work with Mortgage Capital Investment. Alright, so why work with a mortgage broker? We'll go over each of these points in detail to highlight the benefits of working with a mortgage broker, and specifically with us here at Mortgage Capital Investment. First up, we're a one-stop shop for all mortgage products, from residential to commercial, from purchases to refinances with improvements, and so on. Second of all, using a mortgage broker is free in almost all cases, as lenders usually pay us and the customer does not pay us a fee from their pocket, especially on residential applications. Next up, we discuss how clients only fill one application with us and save time, energy, and money instead of completing multiple applications for different lenders. And we'll also dissect the differences in the products our lenders offer to paint a better picture of what we have access to, which the borrower may be limited by when applying directly through a bank. Furthermore, we'll get into the important details of our strength being mortgage professionals and how we're able to assist applicants who may not be able to apply through regular banks. As mortgage brokers, we must know what different lenders offer to present the best solutions to each applicant. This entails product differences, mortgage charge types, and accessibility differences. And knowing these opens doors to applicants who may believe there isn't a way for them to enter the real estate market. These applicants are either self-employed, have previously been bankrupt, gone through a consumer proposal, or just have poor credit. In the past, prospective homebuyers turned exclusively to the banks where they held checking or savings accounts for their mortgage needs. However, banking employees can only fulfill certain needs as the applicant's needs may change. Aside from working during a set schedule, sometimes banking employees change roles and can no longer fulfill their clients' requests as they're outside their coverage scope, either within the banking field or by seeking out a different career path. Today, there are countless options at an applicant's fingertips thanks to the growing presence of mortgage brokers and a multitude of lenders and products to solve particular challenges. A mortgage broker can be a dedicated connection for an applicant for years to come as brokers commit to their clients and establish long-term relationships. Here's what you need to know about mortgage brokers in comparison to banks. You have options when it comes to financing. Brokering is a value-adding service for the applicant and for the lender as well. This is why as mortgage brokers, we are paid by the lender directly for bringing them business, rather than being paid by the borrower in the majority of applications. As our main interest is to obtain the best possible solution for our applicants, lenders also incentivize us to use their competitive programs by offering us opportunities and buying down rates by giving up a percentage of our own commission for the applicant's best available rate. As opposed to each bank the customer may visit to obtain information on their product, we only request our borrowers to complete one application within our brokerage. This allows us to use specific financial and employment details so we can best locate the products that are fitting for their unique scenario. An application is required by each lender when the applicants search the market for the best option themselves by going from bank to bank and analyzing their products. This is time consuming and stressful for the borrower and does not guarantee successful results. You might as well use a mortgage broker and get the best professional advice. As mortgage brokers, we take our applicants' information and we go on a search expedition with all lenders possible on their behalf. This not only saves you time and energy, it also prevents you from having your credit report pulled multiple times, in return protecting your score and credit health. Also, when a mortgage broker pulls a credit bureau, it's valid for 30 days, and if it is required to be pulled again within the 30 days by the lender, the hits to their credit score are minor compared to applicants going to different lenders where each credit report pull results in a major hit on their credit report. The reason we would pull a credit report again is because sometimes applicants make the mistake of purchasing a new car or take on more debt mid-application, and lenders can see this internally but need a credit bureau to verify the information. This can be the end of the road for a mortgage application, and not many applicants know this. Consider this scenario. Would you rather go to a car dealership to buy a car only because it's attractive to the eye, or would you rather study the market and understand what your options are before purchasing the car? It's quite obvious, isn't it? Educating oneself is better than purchasing impulsively because there are costs that could be negotiated in each transaction. When it comes to purchasing a new car, you can negotiate MSRP, dealer incentives, administrative fees, seasonal rebates, special events, and so on. When it comes to mortgages, as brokers, we negotiate the mortgage interest rates, the terms, the conditions, and the exit strategy on your behalf. This way, you don't have to go to multiple lenders and exhaust yourself by learning financial lingo or negotiation tactics. Although it's helpful to know how to negotiate, not every person is willing to enter what is usually a confrontational discussion. So even though you may understand the details of your mortgage product and have learned how to negotiate, this doesn't ensure that you're getting the best product there is that suits your unique situation. Not to mention, you could be taken advantage of due to a lack of technical knowledge in the mortgage industry. The main difference between banks and mortgage brokers is that banks can only offer their own products, while mortgage brokers are able to present their clients with a wide range of lender options. At Mortgage Capital Investment, we work with 21 institutional lenders and over 50 private lenders, each offering multiple products. We have access to a wide range of opportunities for every type of client. All you need to do is contact us with specifics. And when it comes to negotiating interest rates, mortgage brokers specialize in bargaining persistently for the lowest rate. The most common question we get is, what's your best rate? And we advise our applicants as industry professionals to consider other aspects of a mortgage other than focusing on the interest rate alone. We ensure that we make time to become applicants' trusted advisors by maintaining transparent and open lines of communication throughout the application process. As a fact, interest rates are dynamic from day to day, and over some weeks they could range tremendously, and some lenders have better rates than others depending on the volume of business we route through them. Also, other features of the mortgage are just as important as the interest rate. Prepayments, portability, and penalties, among other factors, if not accounted for, could create an undesirable scenario for the applicant in the long term. A consequence could be not making the most of their money over the term of the mortgage, even though they locked in a very low interest rate. This could create confusion and even create a faulty pattern where the applicant seeks an even lower rate in the future because of thinking that the rate is the reason their mortgage is not great. We want to see our clients grow, both financially and in their lives, and this is why we make time to educate them and walk them through the home buying process step by step, talking about each aspect of the mortgage from the qualification stage to the exit strategy. On top of that, we would like to share with you a couple of very important aspects that are often overlooked by bankers, which we make it a point to disclose to our applicants. The first aspect is the bona fide sale clause. You've likely seen ultra-low interest rates on interest rate comparison websites. Well, many of those interest rates are low-frill mortgages, meaning they have restrictions in exchange for a lower interest rate. This bona fide sale clause is a really fancy way of saying you're stuck with your lender until the end of your term or until you sell your home. Consider that the average 5-year term with a fixed interest rate lasts only 3.8 years. Almost half of mortgages on 5-year terms don't make it to maturity, often because they end up refinancing or renegotiating their mortgage. Those wanting to refinance their mortgage with a new lender to secure a lower interest rate would be out of luck if they signed a bona fide sales clause. Another aspect of the fine print on banks' forms is the collateral charge, also known as a running account. This is a charge that is automatic on readvanceable mortgages, home equity lines of credit, or a combination of both, and it allows the lender to adjust the interest rate or total amount loaned without re-registering the mortgage or incurring legal fees. This is the positive side. The negative side of collateral charges is that, for example, if you have a line of credit and a credit card with Top Bank and you also sign up for a mortgage with them, then all of your products are tied to your mortgage. So in case you withdraw funds past your line of credit or credit card limit, you might be on the line with your house as collateral for what used to be an unsecured line of credit or credit card. On the same note, registration and discharge fees are hidden costs that are usually absorbed during the initial signing of documents with a bank. And one more thing about collateral charges and the expense of giving you too many details. If the property is appraised at $500,000, let's say, the bank registration is $560,000 for 5 years being the principal plus collateral, and that $60,000 difference will reduce the capacity of the borrower to obtain more funds from another lender, and so the borrower will be stuck with only going through the said lender in the future. Moreover, mortgage brokers have access to certain products that are not available through popular lenders with visible office or branch locations. These products are offered by monoline lenders, which are mortgage-only lenders, credit unions, and private lenders. Some examples of clients that may not easily qualify with banks include self-employed individuals, newcomers to Canada, individuals with poor credit, and individuals who have been through a consumer proposal or bankruptcy. As their finances might raise red flags within certain banking systems, with a dedicated mortgage broker, these situations only hint that the financing solutions may be limited, but not impossible. Even if institutional lending is not available through A and B lenders, there are plenty of private investors willing to consider a scenario for the sake of not missing out on an opportunity to assist an applicant and to make profit. To wrap it up, a mortgage broker is essentially an intermediary that pairs mortgage-seeking applicants with suitable matching lenders and their products. At the dawn of an applicant's relationship with a mortgage broker, the broker goes over the applicant's current and unique financial situation. This includes an evaluation of their credit score, as well as a review of their income and recurring debts, to assess which lender the applicant could qualify for before the broker starts their research and committing to submitting a mortgage application. The broker does this not only so that he or she knows what types of loans are best suited for the applicant, but also in order to apply for loans on their behalf. We essentially work for the applicant's best interests by negotiating with lenders and focusing on establishing a long-term professional relationship with our future clients. It's almost intuitive for applicants to think of a bank when buying or refinancing a real estate property. The issue is that banks offer instant solutions limited and capped by the organization's growth plans and policies. Some of these limiting factors do not get highlighted during the initial conversation about mortgages by the banks because they're considered standard and the customer loses out on important information they can only find in the fine print. But who reads that? We do. Often conditions mentioned in the fine print contain crucial information for the mortgage applicant and their future plans, and more often than not, limit these applicants in their tracks. At Mortgage Capital Investment, we can help you in the process of getting the financing as quick, easy, and hassle-free as possible while keeping you updated with milestone achievements and progress. We're recognized in being able to manage complex situations and have experience in finding solutions for both residential and commercial mortgage applications. We have access to a broad lenders network, which includes A lenders, B lenders, and most importantly, private lenders, to provide you with an end-to-end solution. You will have a dedicated mortgage broker help you close on your investment, who will be available 24 hours a day from the start to close, focusing with you on your successful application. We aim to reply to any questions you have within 15 minutes of your inquiry. After reviewing your needs and unique situation, we will connect with our lenders network and seek out the best and most suitable lender providing a competitive quote for financing your investment property. Once the quote is received and reviewed by us, we will negotiate with the lender on your behalf to get the best possible mortgage terms, conditions, and the lowest rate. Mortgage terms and interest rates will vary based on the mortgage application and its complexity. Thank you for following along. Please take note reading our disclaimer. We always appreciate your feedback on our webcast, and you can reach us at info@mcinvest.ca. If you would like us to cover other topics of interest, please write to us. Thank you again for joining us today, and feel free to navigate our website at www.mcinvest.ca to explore our full array of services covering residential and commercial mortgages. We look forward to putting together new webcasts in due course, and if you have any topics of interest, again, you'd like us to cover, please reach out to us by sending us an email at info@mcinvest.ca. This is Edward Martinescu on behalf of Mortgage Capital Investment, MCI team, saying thank you very much for making time for this webcast, and we look forward to working with you. All the best.